Welcome back to Alpha Recap, your daily market rundown from stockalpha.ai. We're fresh off the close and ready to break down what mattered today. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to dig into. Big cap tech led the way, and small caps lagged behind. It made for a pretty clear day of winners and losers.
So, what really stands out here is how concentrated the gains were. The S&P 500 closed up about 0.4%. The tech-heavy Nasdaq 100 finished the day up about 1.1%, and the Russell 2000 closed down about 0.3%. Those moves pretty much painted the whole picture.
Right. You could tell traders favored scale and predictability. Big tech, AI-adjacent names, some healthcare tech, and a few industrials. Small, domestically sensitive stocks just didn't have the same tailwinds today.
I mean, when you step back and look at this, why did the Nasdaq 100 outpace the rest? It wasn't one single thing. You had corporate earnings that beat and raised on the quarter, M&A chatter in retail and media, and ongoing optimism around AI product rollouts. Liquidity rotated into megacaps that people think can monetize AI and expand margins. Simple math. When a few big names rally, concentrated indexes outpace broad benchmarks.
Exactly. And on the flip side, small caps were dealing with profit-taking and no fresh catalysts. Regional banking chatter, mixed industrial updates, and some single-stock hits in small financials and microcap healthcare kept the Russell 2000 under pressure.
Honestly, I was a bit surprised by this one.
Yeah, that tracks.
Let's walk through the sector action quickly. Materials and mining had a good day. Metals names climbed on supply concern headlines and some commodity M&A chatter. So cyclicals had pockets of momentum.
Communications and media were active too. Streaming and ad-sensitive names traded in wider ranges as subscribers and ad revenue came into focus. A few content deals kept those stocks moving.
Utilities were quiet, kind of a defensive anchor that traded in a tight band as investors balanced income needs with the risk on tilt elsewhere.
Energy was mixed. Integrated oil majors and some exploration and production names found pockets of strength on geopolitical and supply updates. But refiners lagged as crack spreads stayed volatile. So it really came down to regional fundamentals.
Real estate had its moments too. Leasing wins and transaction announcements helped some REITs trade higher even though commercial real estate stress is still on the radar for some investors.
Financials were interesting. Big diversified financials got some help from M&A speculation and the overall rally, while regional and smaller banks were muted on cautious analyst commentary. So the sector was a kind of microcosm of the day.
Right. And the other thing is, consumer and retail names were active on M&A and AI-driven playbooks. Retailers that figured out inventory and are using AI for marketing outperformed. The rest, more discretionary and lumpy traffic names, lagged.
Healthcare was mixed. Diagnostics and precision oncology pockets did well after some strong results. But smaller biotech names, without clear near-term catalysts, slid after revenue disappointments. It was a classic winners and laggards setup.
Quick run-through of notable individual moves. No recommendations here, just reporting. Garden Health popped after a strong second quarter update and constructive comments on revenue and margins. 3M also impressed with a solid quarter and an upward guidance revision, which caught industrial-focused investors' attention.
We also saw a small diagnostics name slide after a revenue miss. That pressured sentiment in small-cap healthcare. Progressive was in focus after analysts pointed out that earnings per share improvements might not be fully reflected in the price, but the stock's reaction was muted. And a regional name, Nicolette Bankshares, outperformed after coverage highlighted long-term positives.
And Eli Lilly stayed active in the tape as coverage notes dug into its clinical and commercial positioning. Reaction was mixed as investors parsed near-term pipeline milestones and margin implications.
So, what really stands out here is the concentration of leadership. Technically, market breadth was moderate overall, but skewed toward a narrow set of mega-cap names. Momentum indicators on large-cap indexes showed short-term strength, but underlying breadth warned that the rally wasn't broad-based.
That narrowing advance is important to understand. When the market's gains are driven by a handful of large names, it can feel like a late-cycle rally, or at least a rally that needs more confirmations to keep going. If mid and small caps don't join in on the next earnings wave, we could see consolidation.
Exactly. And market structure showed ETFs and passive exposures picked up volume, and derivatives data flagged elevated call activity around large-cap tech names. In plain terms, more option buying on the upside can amplify moves in concentrated indexes, which risk managers are watching closely.
I mean, when you step back and look at this, that options flow can feed the rally in the short run, but it also makes the action more fragile. If those big names pause, the narrow advance can reverse quickly.
Short reaction.
Big move.
Not what anyone expected.
Looking ahead, there are a few clear things to watch. First, Fed speak and data. The Fed remains data-dependent, and analysts note that inflation and jobs prints haven't forced a decisive policy change yet. Any shift in tone about the timing of rate cuts or the potential for more tightening will move markets.
Second, earnings flow. Mid-cap and small-cap results will be key to seeing whether leadership can broaden. If guidance from industrials, retail, or financials is constructive, that helps the Russell 2000. If not, we could get more consolidation.
Third, sector-specific headlines. Materials and mining developments, media and telecom, M&A news, and energy supply updates can all cause outsized single stock moves and trigger rotation.
Fourth, technicians will be watching key levels. Will the S&P 500 build on today's modest gain? Can the NASDAQ 100 sustain outperformance without a pullback? A failure to see improving breadth would make a consolidation phase more likely.
Right, and just to be clear, this is informational. Analysts note market conditions can change quickly, and this is not personalized advice or a recommendation to buy, sell, or hold any security. Consult your own advisor if you need tailored guidance.
So, what really stands out here is, until we get a decisive move in inflation or employment, this back and forth between narrow rallies and consolidation is probably the pattern we should expect.
Final quick takeaways. 1. Large cap growth in tech led the market today, with the NASDAQ 100 outpacing the S&P and small caps lagging. 2. Sector rotation produced pockets of strength in materials, select industrials, and communications M&A names. 3. Breadth was narrow, and derivatives flow amplified mega-cap moves, so breadth in upcoming earnings and Fed comments will matter more than ever.
Yeah, absolutely. If you want to dig into any of the names or themes we talked about, or send us a question about the data or the Fed, head to stockalpha.ai and use the Q&A feature. We'll answer live when we can.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next market close.